Good morning, friends. Tuesday, May 2nd, and we're about a half an hour before the market is set to open. I'm Marv Eisen of Timeless Dollar Trading Academy, and it's going to be an interesting week starting on Wednesday, not today, but tomorrow, Wednesday at 2 p.m. As you can see, the Federal Reserve is going to make an interest rate statement, and it's generally going to be generally expected, that they're going to announce a 1/4% interest rate increase, which is, I think, what the consensus is. But there's a small chance they might hold rates steady, which would shoot the market up potentially, but I think it would be short-lived. And let me go further in this video and show you why. So that's the news for the week. I use the news for entertainment, and I just look at the charts at the flags rather at CNBC on the CNBC website. And as you can see, all the flags are in the red, not by a lot, but they are in the red starting out today. Now, looking at the S&P Emini futures, now this is a chart of the futures. This is a 3-minute chart over a 4-day time span. And as you can see, prices have risen steadily over the past 4 days. Actually, they've made a low at 40.55, a high at 42.03, so about 150 point rise in the last 3 days. Where will they go today? Will that rise continue? Well, as you can see, I have my Taylor calculated trading zones on my chart each day to tell me the likely area prices would trade. And as you can see, the trend is upwards, and the calculations follow that upward trend. But will the market continue? Now, this is the 1-day chart of the S&P. Not the E-mini, but the S&P. You have to remember, the E-mini is a artificial construct. The S&P is the real market. That's where stocks, that's where traders, that's where investors feel that value exists. And if you can see the last candle, see right over here, you see a gravestone doji. And that corresponds to a overbought stochastic. So it might be that we are heading into stiff winds, if the bulls rather, today. So that's just in terms of reading flags. Now, Japanese flags, and most people use Japanese candlesticks, but these flags that the candlesticks represent are insightful, especially over the big picture, but still in all, we have to really learn how to use them and put them in the context of where to trade. Now, going back again to where the market is going to trade today. Now, as you can see, I don't have my Taylor calculated trading zone drawn out on my chart because that's something that is proprietary. If you want the calculator, I'll show you how to get it at the end of this video. And you can use the Taylor trading technique. It's been used for 75 years. It's been used in every single market. And Taylor's calculations, George Taylor was a genius. And his calculations have proved very insightful as for virtually every trading market to tell where the market is likely to trade, and especially the range. So I won't go into that today. There have been other videos that I've made to talk about Taylor. So today, where will the market go? Will it continue this upward climb? Well, we'll see in anticipation of tomorrow's interest rate rise. Going forward and looking at the big picture throughout the month of May, the big picture is going to be the debt limit fight in Congress, between Congress and the White House. But that's another story for another day. Anyway, trade safely, use lots of patience. Thanks so much for watching, and I'll see you in my next video. If you want to use the trading zone in your trading, and you can use it for any market you trade, I use it for the E-mini and micro E-mini, but you can use it for any market. I make it available at timelessdollar.com as a calculator. That's right, you can calculate the trading zone for any market yourself. Download it at timelessdollar.com.